Welcome to the Nate Gratian Show, where we talk all things personal finance, investing, and entrepreneurship. I'm Nate, your host. Thank you for joining me here today. And today we have an exciting topic. I've got my coffee ready here beside me, and we're going to be talking all about terms and phrases that you should understand when it comes to investing. Terms that you need to know that you'll come across when it comes to investing. We're not going to dig into every single one of them because there are a lot out there. But we will dig into some of the main ones that you will come across right up front as you begin to invest, as you begin to start investing. Did you know that you can find this podcast and a lot of other things on our YouTube channel, The Nate Gratian Show? You'll find this podcast there. You'll also find shorts that I do through the week, little 1-minute videos, keeping everyone up to date with what's happening in the market and what we're doing in our portfolio on eToro. And then also in the community tab, you'll find all the written articles that I write for our profile on eToro. You'll find the written articles there in the community tab on our YouTube channel to read and to keep in touch with everything that's going on in the markets and in our portfolio. If you do have a question that you would like discussed or a topic you'd like discussed on a podcast episode, you can comment on any of those videos or send me a message on Instagram at Nate Gratian, and I'll let you know when it is up and available for discussion as a podcast. But let's look into some of the terms that you're going to come across, and we're going to dig into ETFs, CFDs. We're going to talk about all these different kinds of things, investing with leverage or margin, and what's good, what's not good, what you should do, what you shouldn't do, and these different things. So, the first, ETFs, is one of the first you'll come across. ETFs stands for Exchange Traded Fund. It is essentially like a basket. Think of it like a basket. You're not actually investing in the ETF. Isn't a company. The ETF isn't a company. It's owned by a company, oftentimes Vanguard or BlackRock or ProShares or something like that. Invesco is another one. So this ETF, the basket, will be owned by a company, but then inside that basket is a whole lot of stocks, and it divides your investment amongst all those stocks. For example, TAN, Invesco's TAN, T-A-N, is an ETF that invests specifically in solar energy companies. So if you're passionate about solar energy and it's something that you want to invest in, you can invest across all the solar energy companies throughout the US by investing just by putting your funds in TAN, rather than having to individually pick each of the solar energy companies. VTI is another one, and it's a large portion of our portfolio. It's the biggest portion in our portfolio. VTI is Vanguard's total US ETF. So it's every public company in the US. About 3,500 companies are in this ETF. It's weighted from the biggest to the smallest, meaning the biggest company will have a larger portion of the funds that you put in there. So I believe right now Apple is the biggest, sitting at right around 5% of that ETF. So you put $100 in there, $5 is going to go towards Apple, while the smallest company will get the smallest portion of the funds that you put in. Now so that's how an ETF works. It's a great way to break up and diversify your portfolio. There's all kinds of ETFs out there. If you're thinking of something you'd like to invest in, if you want dividends, or you think of a sector that you'd like to invest in, chances are there's an ETF for it. There's an ETF for electric vehicle companies. There's an ETF for airline companies, jets, Jets. And so there's all these kinds of ETFs out there that you can invest in. Another one, let's move on now to CFDs. CFD stands for Contract for Difference. It is a topic that if you search it online or on YouTube, you'll find a lot of negative things about it. But there's two aspects to CFDs. One is bad and why you find a lot of negative things about it. The other one is fine. So contract for difference if you purchase a stock or an ETF, let's say, with your brokerage, like on eToro or something where we invest, if we purchase a stock and decide to invest with leverage, say we put $100 and we're going to use 10 times leverage, it will now be a CFD, or a contract for difference, meaning we don't own the underlying asset, we don't own the underlying share. We have a contract with eToro. We have a contract with the brokerage for that. So we don't actually own the underlying share. And the reason that is because you've used leverage. You've used 10 times leverage. So you put $100 in, 10 times leverage, it's like you've put $1,000 in, right? Now, that's the dangerous side of it, and I do not recommend investing with leverage, because here's what can happen is if that stock or that investment drops all of a sudden and has a decline, you could actually lose more than what you have. So it's like you've got $1,000 in there, but if it drops 20%, you've lost $200. You're now $100 in debt. You're $100 in the hole. And if it goes to a certain point, we see this in cryptocurrency a bit. This is why we see big swings a lot of times. If it goes to a certain point, what happens is you have to put more money in to keep that position open. And if you don't put more money in, the position closes, and you have a time frame that you have to do that. You have to put more money in. You have to try and find money from somewhere to put in. And if the position, if it closes, then it will close if you don't put more of your own money in. So it'll close. You'll owe money. You'll be in debt, and more money will come out of the cryptocurrency, for example, and send it further down. And so this is why we see quite some volatile movement inside the cryptocurrency industry. Investing with leverage is a dangerous thing, and I don't recommend it. I don't do it myself. It can be tempting. It can be very tempting to do, especially when you're looking at something like VTI that is a total market. It can be tempting because you're like, well, it's going to go up over time, but it still has its years where it's down, and has its bear markets, and so it has those times. And so I do not recommend investing with leverage ever. Now, the other reason you'd have a CFD, and this is why we have a couple of CFDs in our portfolio, is because of government regulations. And so investing in a stock or an ETF, there were some ETFs that the Australian government, we weren't allowed to own the underlying asset just because of regulatory things with ASIC, the Australian Securities and Investment Commission, just some things like that is actually now these ETFs you can just purchase, and usually it's just a lot of paperwork that has to be done. But we have some of our positions in some of these ETFs, we have own as CFDs. They're not levered, they're not anything like that. It's all fine. And if this is the case because of the government regulation thing, then that's no problem. And so that's what. So we've kind of touched on two terms there that you'll come across: CFDs and leverage. Now, oftentimes people get leverage and this next one a bit confused. Investing with margin. Margin investing is when you borrow money. Essentially, you borrow 10,000 and you invest. And the thing is if you go down, then you've not only lost money, you've lost money that you've borrowed to invest. I do not recommend borrowing money to invest. It's not worth it. It grow at the speed of cash. Your investments will pick up, and if you're able to deposit consistently and regularly, you'll be amazed how quickly things grow and how quickly things move as you progress. Now, the last thing I'm going to talk about, and this is a written article as well that you can find on eToro and also on YouTube. You'll be able to find it on there. Is the danger of gapping, I want to talk about gapping. What the gap is. So we have the market. It opens in the morning, obviously, and closes in the evening. But there is the pre-market hours and the after-market hours. These are hours where the market is open before the stock market opens, essentially. business is running and all that, and where the market is open after the market. The businesses give their earnings reports oftentimes before and after, and the CPI number, well, oftentimes the PPI number, and these different statistics will come out an hour before the market opens or after the market closes, these kinds of things. Now, let's say, and this happened just last week, where the CPI number came out weaker than expected an hour before the market opened. The S&P jumped up 3.5% in the pre-market. 3.5 to 4% in the pre-market before the market opened. And so if you were already invested in the S&P 500, when the market opened, your portfolio jumped up that 3.5-4%. It then went on to make another percent during the day, where it closed 5% up. But if you saw, it's gone up 3.5% or 4% in the pre-market, quickly, let's buy some, and you put $1,000 in, right? You put $1,000 in, or whatever it is, you can't trade in that pre or after market hours, and so your position will be bought, your order will be placed when the market opens an hour later, and so your position is placed and bought, and you buy in after the 3.5 to 4% has already been realized. And so your $1,000 at the end of the day, it goes up another percent, but you don't see the full 5%, you see 1 to 1.5%. So you've made, on that $1,000, you've made $10 to $15 instead of $50, right? That's not a lot for $1,000. It's like, oh, that's fine, but let's talk 100,000. Let's say we're investing 100,000. Instead of seeing $5,000 gains, you've seen $1,000 to $1,500 in gains. So trying to jump in and out, and trying to jump in when you see things go up, or jump out when you see things go down. If it's gone down and you jump out in the pre-market, your order won't be placed until the market opens, and you'll see all the losses. You'll see all the losses. This is why I tell people, invest with the long term in mind, invest with a long term perspective, and keep your eye on the big goal. Thank you everyone for listening today. I hope some of these terms that I've talked about and shared with you, I hope you find them helpful. I hope they make sense. If you have questions, or you come across a term that you have a question about, comment on the videos in YouTube, or send me across a message on Instagram at NateGration, and we can discuss, we can talk more. But thank you again for joining me. If you're looking to invest, eToro is a great place to invest. I really enjoy investing on there. I hope you have a wonderful day, and we'll see you in the next episode.